So let me just make sure. All right, perfect. So you start calling a zone when you see 2 wicks there? Yes. 2 wicks basically mean when candles are rejecting. So we're going to talk about that here now. Okay, a trend is identified through the time frame you are looking at, right? This means is like, let's say if you're looking at the daily time frame and you're like, oh man, okay, so it seems like the daily time frame is bullish. So if the daily time frame is bullish, and if you go down to the smaller time frame, let's say the 1 hour or the 4 hour, and you might see that the 1 hour might be bearish. 1 hour might be starting to go down. And when you're looking at the 1 hour, you're like, well, the daily is bullish candle, but man, the 1 hour is bearish, so might want to look for sells. It would just make sense to look for sells because a trend is identified through the time frame you are looking in. Very important. A daily time frame trend might be bullish, but the lower time frame 1 hour and 4 hour might be bearish. This is why when we're streaming New York session in YouTube, guys say, hey, why are you selling when the daily is bullish? Because in the meantime, we see sells happening, so it's very important. It's a good habit to recognize supports or resistances formed on 30-minute and 1 hour time frames to gauge where price will move next. Whenever you're identifying a support on the 30-minute, you're gauging, okay, price will move bullish. If you're identifying support, or let's say if you're identifying resistance on the 1 hour, then you're gauging, okay, price may move bearish. It's a very simple concept. The only problem is that people don't wait for candles to close in their direction, or they don't wait for confirmations long enough. That's the only problem. And when you lose a trade, you start over trading. Like you ever seen a hamster running in the wheel and it starts moving fast and fast and fast? When you lose a trade, that's how your brain starts working. You're like, oh shit, I lost a trade. Now I gotta take another trade. You take another trade, you take losses. Now you want to make back those losses. When you try to make your losses back, it doesn't work. Your whole shit is going to fall apart. It doesn't work like that. So you need to take 1 or 2 trades and continue on. So let's see here. Best way to identify a trend is to see if price is making a high or if price is making a low, right? This is very important. Whenever price is making a high, this means price is in an uptrend and you're waiting for a support to be formed to continue moving up. Whenever price is making a low, that means price is in a downtrend and you're waiting for price to create a resistance to continue price moving down, right? Very simple concept. Whenever price makes a high or a low, there's an 80% chance it will always get retested. I have done this for the last 2 years, and if I've taken like 100 trades, I've maybe lost 25. If I'm going to say I'm a bad trader, I'm going to say I lost, let's say, 30 trades. It will always retest the high. I've made thousands of dollars just by focusing on this simple concept. And that's how the market moves. I mean, if you want to know how market moves in trends. Either it's going to trend up or down, or it's going to consolidate. When price is going to trend up, it's going to make a low, and then it's going to retest the high. If price is going to move down, it's going to make a resistance, and then it's going to retest the low. That's how the market moves. And that's how candles move, and that's how money is generated, So these are very simple concepts. So let's see what we have here. Let's see what Rakil made. Oh yeah, so this is also called the break and retest too, right? So let's say we have a support, right? We have a support, and price. No, actually, let's say we have a resistance here, and price is moving up. Price is moving up to a resistance, and someone says, oh, I'm going to take a sell over here because we're at resistance. I've done this. Price moves up higher. You're like, oh shit, price is moving up higher. Okay, let me take another sell over here because it has to go down. So what's happening at this point is, you are in like a drawdown, right? So you're like, okay, let's wait. And now price moves up a little higher more. And now you're in an even more drawdown. You see what happened here? You took a sell here because price moved at resistance. So you're like, okay, I'm very smart. I'm going to take a sell early. I will not wait for a candle to flip. And you took a sell, and now you're slowly getting fucked. And now it just goes in deeper, And now you're like, oh shit, now we're getting margin called. So now if you're looking at it from a very logical perspective, right? If you're looking at a logical perspective, you're looking to see that, okay, price is at resistance. I want to take a sell, but I want a bearish candle to close. And if I'm not getting a bearish candle closing here, I'm going to wait a little bit. And you wait. No bearish candle here. You're waiting. No bearish candle. And what you see is, man, hey, wait a minute. We're breaking out of this resistance. If we're breaking out of this resistance, there's going to be a retest. And then there's going to be a support formed. And then I can take a buy, because now what's happening is price made a high over here, right? It broke resistance, price made a high. Now this is a very generic concept, and we're going to go over examples too, right? So now price is coming down back at this resistance turn support. It hasn't formed support yet. Now the support has been formed. When you see on the 30-minute or the 1 hour a candle is closing bullish, you know a support has been formed, and now you can say that, okay, price made a high, came down, formed a support. There's a very high chance price is going to retest that high. And now I want to take a buy, but I want to understand where my stop loss is going to be. The stop loss is going to be below the bullish candle, and you're expecting the next candle to continue moving bullish to retest the high. Very simple concept on trading the trend. You're waiting for supports to form, for price to retest the high. If you have a runner running, that runner may continue moving up, and then you can post it on Instagram and say, hey guys, look at this magical this trade I took, and everyone will say, oh wow, man, you're so amazing, wow, how'd you do this, teach us. So the main thing is you're just waiting for candles, right? So now in the same way, when this uptrend going to be valid till, when the uptrend is going to be valid till, we don't know that. All we know is that we are securing profits and we're letting a runner run. We don't know when the next candle is going to go down. We don't know that. No one knows that. If God trades Forex, I doubt if God even knows what market's going to do. It's just very hard. We don't know when the uptrend is going to end. We don't know where the downtrend is going to end. All we know is that we can just secure profits. We know we can leave runners, and we can just call it a day. Sometimes, when I close my buys, I see that price continues moving, right? And when price continues moving, then I'm like, well, it is what it is. I secured my profits and I had my runner. If my runner ran, perfect. If my runner didn't run, then that's okay, whatever. Now in the same way, when price is moving bearish, it's coming down to support, it's breaking support, it's creating a low, right? It's creating a low, and then a low is formed when you have a candle closing bullish, because now it's formed a support. It's formed a low in a downtrend. And now you have candles going up back to retest. You don't want to sell over here because you want candles to close in your direction first. You don't want to sell over here either. You want candles to close in your direction first. When the candle closes bearish, this is where you are looking to take sells. You're waiting. If this is a 30-minute time frame, you're waiting 30 minutes, man. You're waiting 1 hour, you're waiting 30 minutes, you're waiting for that candle to form the way you want it to form. Because once the candle forms like this, there's going to be a very high probability that the candles are going to continue moving where you want it to move. Right? These concepts, they may be simple, but they are very, very important. Extremely important. And now, then price starts moving down and you're like, oh, perfect. We're having a winning trade. This is all good, because price is making lower highs and lower lows. So what we're going to do now is we're going to look at some examples here. Let's see. Let me see if this is still recording. It's still recording. We're in 4 hours and 30 minutes. Ooh, perfect. All right. Trading the trend. What do we see here? What type of bias do we have here? Bearish trend. Someone said bearish trend. Price made a low. Perfect. Someone said price made a low, formed support. That's perfect. Excellent. Now let's see. Now the other thing we see here is that we know that maybe price has formed a support. There was another thing that was broken here, right? So we're going to keep that in mind. So we're going to see how the next candles form here and see what's going on. Oh, price is starting to continue going up. Price is still moving bullish. We're still waiting for, price is still moving bullish up over here. It's coming up to the next resistance here. We have a candle closing bearish like this. Would this be a good indication to sell? Why not? Oh, someone's saying not for me. Someone's saying yes. Someone's saying not for me. See now, this is where anticipation comes with taking a trade. Right? Someone's saying it's a weak body, seems like a rejection too. So this is where you want to know that, okay, whether I want to take a trade here or whether I want to just anticipate it. But like, let's see what happens with the next candle here. Next candle closes like this. What's happening here now? See, this wasn't a good idea to trade. You guys are smart. Someone said, hey, we're going to wait because next candle broke the high of the previous one and it closed like this. So someone was waiting here. Right? The next candle closed bearish, and now, like the overall bias was sells. Right? Overall bias was sells. So the anticipation is also very, very important when you're looking at trading. Right? So overall bias was sell. Next time it starts to continue down. Some people took sells here, and overall, it kind of worked out well because price was bearish, came down, made a low, went up. This candle was not a good confirmation. This candle was okay confirmation. This candle was really good confirmation, provided that this range was big enough. All right. Let's move on to the next one here. Okay. So, what's going on over here? Seems like candle is bearish. Right? When candles are bearish, they go bearish from a resistance. So we have a resistance here. Candle came down, wicked, and if we look left, it kind of wicked over here. Right? It kind of wicked over here. So basically, we have mainly a range. Right? We have a range, and this range is this big. This big range. Now, someone can say, oh, well, what about this range right over here? This range, I don't think this range will count a lot because if that range was to, if that range was to affect price, it would have affected this candle as it was coming down. But this candle just ignored that range and continued down. So now we have a clean candle here. Does this make sense? Now we have a clean, very clean candle here. So what we're going to do is we're going to probably just wait to see what happens here. And, if we see something, we're going to take a trade here. So let's see here. We have a candle going bearish. We can't take a sell because support is there. We can't take a buy because, candles are bearish. Oh, we have a bullish candle forming a support. If this is a 30-minute time frame or a 15-minute time frame, no, a 1-hour time frame, what's the probability of price moving up? Someone might say we don't want to take a trade, but right now, even if you're not taking a trade, we're just saying what's the probability of it moving up. Because once you start looking into probabilities, then you start executing slowly. Then your execution comes in. So the probability is much higher to go up than to go down. When I was starting to figure this out, I was trying to trade with lower risk because I wasn't sure, but I knew it would go up. So if we execute it with a lower risk, we know the stop is going to be right down over here, and we're going to take a buy. Someone is going to take a buy. Someone's going to wait around. So next candle, see that? Look at that. That's why we placed the stop loss a couple pips below the candle. But the candle hasn't closed above the previous candle's price. We're not looking at that. It did close. This candle, the bullish candle, this bullish candle did close above this candle. Right? It did close above this candle. That's what we're looking at. So let's see next candle. Perfect. Went bullish. Because candle break the low of the previous candle, that's the reason to take a buy. No, it broke the high of the previous candle. That's why I took the buy. You know, so the stops were kept a couple pips below the candle. It's very simple, very simple concepts. Very simple concepts. You know, like the candles were coming. Let's see here. Things are getting slower here on my computer. Candles coming bearish. You know, this candle closed bullish, closed above the high of the previous candle. What we've learned so far in the last 4 hours is that when you have candles closing bullish like this at support on the 30 or the 1 hour, there's a high chance for the next candle to continue moving bullish, you know, so that's why we had the bullish run there. So let's see what happens here. The next candle prints bearish, you know, so if you were in a buys, this is where you're getting out of the buys, you know, this is where you're getting out of the buys. And now it's time to, oh yeah, see, now it's just arranging and just terrible. Oh, it eventually started to move down. Yeah. So this was a good buy here, buying opportunity here. This was very good. This kind of got tricky because you see how these candles came down and then they formed support, right? Formed support to maybe continue going up, but it didn't go up. I mean, when this now someone can argue that, hey, what if we had someone can argue that what if we had this area here and we had this candle closing bullish, right? If this candle was closing bullish, there was the potential set on that rejection on the resistance. Yes, if this candle was closing bullish above resistance, someone could say, okay, well, we can take a buy over here, keeping a stop below this candle and expect the next candle to go up. But if the next candle closes bearish like this, then you're taking 50% positions off. Your closing percentage off because you expected it to go bullish, but it closed bearish. So now you're taking some positions off. Yeah. Perfecto. Let's move on to the next example here. Let's see what we have in stock. Ooh, continue moving down. All right. So that buy was in the middle of the range. Yes, that buy was in the middle of a range. So let's say we have this scenario here. So right now we're ranging. It's very, very easy to spot the range. And the reason why is because we have support over here and then we have resistance over here, right? So we wait, you know, even though, let's say the daily trend is bearish, but looking at the 1 hour or the 30-minute or the 4 hour, we see a range. So we're just sitting back, you know, just like Raja, you see Raja sit back. So you're just sitting back. Buy stops, sell stops. We're not going to talk about buy stops and sell stops right now because I don't want to overload people with a lot of information. You know, over the next 3-4 weeks, I'm going to introduce some more webinars over the weekends to introduce, you know, buy stops and sell stops to slowly, gradually introduce information. So that's why we're only keeping it very, very basic right now, the way how I trade. And then we're going to continue on, you know. So, okay, so we have a candle going bearish. We can't take a sell because there's support right there. We have a candle closing like this. We don't know what's going on. We have a candle closing bullish. We're at resistance. We're not sure what's going on. We have a next candle closing bearish. It's still ranging. So mind you, if these are 30-minute candles, you are waiting 30 minutes. You are waiting 30 minutes. You're watching candles form because you're watching this candle go bearish below support. You're waiting for it to close. Some people are taking sells over here only to get wicked out. This has happened to me before. You know, once candle goes below support, I take a sell and it comes right back in. I'm like, oh man, what the hell? I took a perfect entry, but in the opposite direction. You know, so just waiting here. Oh, perfect. We have a breakout. Now what do? We have a breakout right now. All right, we're waiting. We're waiting for support. Wait for retest. We're waiting. Perfect. We're waiting. We have a breakout. Price made a high. So we're waiting. Oh, we have a candle going bearish now. Perfect. This is what we want. We want candle to come down to support this area, create a support, and then go up. We're a candle closing like this. Oh, wow. We have a candle coming right down over here. Now what's going on? Oh, we have a candle closing bullish at this area where it broke. Someone is saying caps lock, buys. So now this is a support formed. Now this is support formed. You're keeping the stops below the candle, a couple of pips below the candle. If someone's not trading right now, you are anticipating, you're visualizing the next candle to go up. Guys, listen, visualizing is the most important part of trading. The way I got good, I started visualizing the 1 hour candles. I said to myself that, okay, if I want winning trades, I want to visualize candles moving bullish. I want to visualize them. So I'm visualizing a candle going bullish, and that's going to be the trade. Oh, wow, didn't expect it to go up this high. But there we go. We had the buying trade. You're putting stops over. See how notice how this candle didn't have a wick at the bottom at all. There's no wick there at all, which means there's no bearish pressure at all. It's just straight savage bullish volume candle. The next one just did a retest here on this area. It started to move up. Just crazy. So this is where you get a Lambo. This is where so you get paid to wait. Awesome. Let's move to the next example here. Let me just remove this. Man, I'm fasting, man. Like nothing eaten or drinking. Fasting right now. So my brain is going, whoop. All right, awesome. Let's go to the next slide here. Oh, we're having a problem here. Oh, okay, there we go. Perfect. Okay. What's the bias here? What is the bias here? What's going on? Uptrend. Okay. The stops would be below the previous candle wick. Yes, Jen, that's true. The stops are going to be below the previous candle wick. So we have an uptrend here with the resistance formed, right? This is what we know right now. We have an uptrend, a high has been formed, candles have been moving up, so we're kind of waiting right now. Perfect. High has been formed, candles are moving up, so now we're just waiting. We're basically just waiting. All right, so this candle formed bullish like this. Is this a good opportunity to take a buy? Some guys are saying no. Some guys are saying because it's a weak candle. Yep, that's true. That's true. We need some solid candle to back up our analysis. We need something solid to say that, hey, we need something solid basically. Ooh. Looks like we missed it. Damn, yeah, shit. Sometimes things like this happen. Sometimes you get these thick candles happen and now you're like, okay, let's just wait. So now you're just waiting. Now you have a candle closing like this, and you missed the trade, you're like, oh man, it is what it is. There's no FOMO, right? There's no FOMO, can't get FOMO. Whenever price this happens, it just happens, can't really do anything about it. Oh, now what's going on? Now can we take a buy over here? Could we have caught this on the 15-minute? We're not talking about 15-minute right now. We're just talking about what's going on right now, right? So, okay, someone is saying we will take a buy. Someone is saying I'm gonna, what's this? Could you have taken the buy when the price broke above the doji? Yes, Gurav. That's an advanced concept, so we're not going to discuss that right now. I have a separate webinar for that. So people are saying buy, support has been formed, an uptrend. Also, if we draw a zone, this is going to be kind of like a zone here, I think like this, because there was a resistance here, price went down, and now we formed sort of like a support. So now we're anticipating next candle to go up. We're visualizing it, right? So obviously, so far we know that the stop is going to be below the candle and the buy is going to be taken. So whenever you're placing the stops below the wicks, you're anticipating price to continue up. Some people are saying the wick is too small up here, so I might want to wait, but at the same time, I do think price is going to go up. That's also good. You know, in life, we have two groups. One group is aggressive group, the other group is conservative group. The aggressive group is saying, we missed a trade, and now we see an opportunity to take a buy, so we're going to take a buy. The conservative group is saying, well, we missed a trade, and since this candle is a smaller candle than we wanted, we still think it's going to go up, but we're not going to execute, it's okay. Right? But the bias is still, they're saying it's going to go up. So let's see what happens. Next candle, perfect, goes up. You know, because we're trading the trend, we waited for price to make a high. It came down. Candle closed doji. This candle went up. Missed a trade. Then this happened. We waited. Then this candle happened. We're like, okay, perfect. Makes sense to take a buy. You know, so some people took a buy. And some people who didn't take a buy, we still had our bias, and the bias was that it's going to continue going up. Even if you doubt a trade, always take a paper trade. Even if you doubt a trade, paper trade. I always take paper trades. So when I start the webinars for the New York session, and when I take my 1 or 2 trades first thing in the morning, and when the trades do happen after that, I'm always paper trading in my head. In my head, I'm always saying that, okay, I'm going to paper trade this trade, and if it works out, perfect, I'm going to use this information into the next day. You know, so it's always good to, in your mind, paper trade, grab a piece of paper, write down, you know, it worked. So that's always good. Having winning analysis and missing a trade is the same thing as winning a trade, because you were not wrong, you were right. And then we had this candle and then came down, and yeah, it just started to come down. Wow. Okay. All right. What's going on over here? Bearish bias with support formed. Downtrend. Wait on a bearish candle. Wait on a better trade that fits your plan. Downtrend. Okay, downtrend. So can we take a buy over here, or are we waiting for a resistance to be formed? Okay, retest or a buy? Are you waiting for a retest, or are we taking a buy? Wait for resistance, because retest, exactly, because you know trend is down. It's a downtrend. Someone said the fuck. Yeah, so it's a downtrend. When a trend is down, you're waiting for price to create some sort of a resistance and to retest the low, because now a low has been formed. You know, did it gap down? Yeah, a little bit. I think it gapped down a little bit. Okay, so now we have a candle forming like this. Right? What's happening here? We have a candle forming like this. Rejection, retest, resistance forming. You know, let's see how the next candle forms, because realistically, I don't like the way this candle has formed. It has a small body. You know, it has a very small body. So kind of wanna wait. The principle I want to apply to this scenario is going to be in an advanced webinar that I've already done for you guys. So later on, you guys can watch that, but like later on, right? So, okay, perfect. Now this seems like a good selling opportunity. Yeah, now we sell. Perfect. So now we put our stop loss, you know, above this candle right here. And now we anticipate the next candle to continue down to retest the low, right? That's the higher probability. Okay, what's the probability it's going to go down? It's pretty high. Okay, yeah, it's pretty high. It's pretty high probability it's going to go down, right? So we won a lot of trades so far. Way better stop loss. Yeah, it's a way better stop loss right now. Oh, shit. Oh, someone said I don't like it. Yeah, see? So if we would have taken a sell here, got stopped out, right? We got stopped out because this is just a probability, you know, probability of it not working out. In the past examples we've seen, it has worked out. but then this one times it may not work out the way you want it to, so when this happens, there's no rhyme and reason. You can't say, oh, what was the cause of this happens. When this happens and you had a higher probability of someone said they're still in a trade because they moved their stop loss. I don't know, man. I think you gotta get out of the trade. So you can't move stops. We're not in the business to move stops, right? Perfect. So when these things happen, you're like, it is what it is. You just kind of like, okay, whatever. All right, let's see what happens next here. Wow, price continued moving up. Bearish candle. Okay. So we formed a support here, and then we formed a resistance here. Now we can give our trade a second chance for selves. We can give our trade a second chance. Higher lows and higher highs. No, we're not making higher highs and higher lows. We're making lower lows and lower highs. We're looking at what's happening now. Right now, what's happening is candle closed like this. This candle made a lower low, lower high, and a lower low. You have this clean candles here, right? So if this was a 50 pip range, this would have been a really good sell based off resistance formed. Remember what we talked about? We talked about whenever there is a resistance formed, you need to see a bearish candle forming here, right? And then it's going to continue down. Remember that at first we saw that the price was bearish. We were making support. We had to come down to retest the low, but it didn't happen. Price did what it had to do, came up, created a resistance. Now it's the second chance. Now you're like, okay, maybe now price may continue moving down since we have clean traffic here to the left. You see this? And if this is a 50-40 pip range, there's a high chance price may continue down. Is not now a bullish momentum, so we should stop thinking about sells? Well, it's up. Someone can say, okay, it's in a bullish momentum and we don't want to take sells. And someone can say, well, we're forming resistance and candle has formed bearish, so price may continue moving down. So that comes into fact that, okay, are you overthinking or are you just executing based on what you see? Right, so I think this was a little difficult, but people who saw resistance here forming and this candle forming bearish, so this was confirmation for price to go down. Essentially, if you did have a bigger range here, then it made sense to take sells. But if this range was, let's say, 20 pips, then it would have made no sense to take sells, right? But if this was a 50 pip range, then you could say, okay, well, if this is a 50 pip range, man, I can grab maybe 20 pips out of it real quick and be out of it because price may start doing some dirty dancing here, right? So something very important. And then, and then price started ranging here. How's my pace? My pace good, fast, slow? I think it's good. Pace is pretty good. Pretty good pace. Good, perfect. Ooh, sexy pace. Nice. Man, I can't believe Zoom started finessing us in the start, man. I was pretty disappointed. I was actually very embarrassed because I had a very streamlined webinar planned, and in the start, Zoom just didn't want to do it. And I also feel bad for Ted because, Ted had a very bad audio quality there too, but we made it work. All right, let's